Hey folks, I think I accidentally stumbled upon the greatest mystery being a Canadian investor buying US dividend stocks in tax-free savings accounts. Many of you blew up the comment section yesterday when I told you I was selling Medical Properties Trust, a real estate investment trust, in favor of Verizon because I wasn't experiencing the same kind of taxes. And I want to explore that today because, like the 10 commandments coming out of the Bible, I always thought you had to pay over the border tax, but maybe you don't. On top of that, we're going to take a broad view of the market and talk about one stock I just dumped $20,000 into on a short-term swing trade bet. I plan on selling it in the next 1 to 3 months. Whether I make money or lose money, that is going to be for your entertainment value. So consider subscribing, hitting that like button, and we're going to break down all of this. First and foremost, guys, this has been blowing my utter mind. I'm going to make a specific video about this and actually call the CRA because from my entire investing career, I learned that a TFSA, a tax-free savings account, all Canadian investments held in the TFSA are not taxed when withdrawn, nor are gains made on these investments taxed. However, this does not apply to the US stocks held in a TFSA. US stocks are basically subject to a 15% withholding tax on those dividends, but are you? I don't know, and I need your help, and I want to know your personal experience because taking a look at the transaction history in my actual TFSA here, there's some intriguing results to say the least. Because taking a look, guys, on Medical Properties Trust going back to October 14th of 2021, I was paid a dividend of $137, at which immediately there was a withholding tax of $20.66 or 15%. This is automatically done and shows up as a transaction. However, I am not seeing that on all my investments. I am seeing it on my index funds. Like here's one from VOO where I got $39, withheld $5. However, when I take a look at these individual stocks like Southern Company, like Microsoft, like Apple, like here's Apple paying me $18.70, you don't see any withholding tax coming out of it. And when I run the math here, guys, and I go through all of it, like I look at the general yield, what I should be making, how much my account says I'm making, seeing the deposit go into the account, it all adds up that there is no withholding tax. Now, I know MLPs, real estate investment trusts, can be taxed differently, and that might have something to play with this, but I just don't know. And I want you guys to tell me if you're logging into your TFSA, go to the transaction history and tell me if you're seeing something similar if you hold US dividend stocks. This will be a conversation for another day. Consider subscribing. So let's get into the general market here first and foremost, guys, because it has been a consolidation day. I mean, we had a wicked rally, right? So what do you expect? A little bit of profit taking, nothing extreme. Like not even Bitcoin is down 1% today. So, I mean, nobody's generally complaining. It's just a boring day in the market. And I figure, boring days are fun days to keep adding positions. So what I did is I'm sitting on a lot of cash right now. I have enough cash to pay my corporate taxes. I have a ton for an emergency fund. And I was like, I don't really need this capital or even the emergency fund for the next 3 to 6 months until my living changes, my whole living circumstances, and then my expenses are going to go up. But in the meantime, I'm like, I still have an emergency fund, still got lots of cash coming in from my job. Why not make a short-term bet on Alibaba? So I went ahead and I bought another $10,000 worth this morning. I figure, what's the worst downside risk? It drops 20, 30% back to maybe $80, $90 a share, and whoop-de-doo, I'll make that up in a month's worth of work pay. So, but taking a look, here's the position, guys. I bought it in my regular managed account. If I do make gains on this, I'm going to transfer them over into my RSP. That's what I do with all the dividends and all the cap gains I'm generally getting from my managed account so I can avoid taxes. But take a look at this because this is in Canadian dollars as well. I do not have a US regular brokerage account, so this is 9,700 CAD. And it's about 67 shares equivalent. I'm already down $173 because I purchased this at $118.40, but I've got a real bullish sentiment that, as I mentioned, I really think Alibaba has hit a bottom here. And this is half the position of the $20,000 investment because many of you know I've already bought an Alibaba at 89 shares, right around $95 a share is the average cost in my my basic corporate account, and I'm currently up $1,906. So by all means, I really don't feel like I can lose money here, but sometimes stocks can always go lower. And like I said, this is just for me personally, and I obviously have a lot of money sitting here, and many of you know my strategy is using all of these growth stocks, whether it's Tesla, Google, Facebook, as they go up, I always scale them down to continue building up my dividends, those foundational stocks, because my goal is by the time I'm 30, which is going to be coming up at the end of May, I want to be making $1,000 a month in income off the most foundational companies on the planet, whether that's McDonald's, Procter & Gamble. I already hold hold a massive position in Johnson & Johnson, and this has always worked out to my favor in outperforming the markets. I mean, I made over $30,000 in Tesla from 2019 to 2020 into 2021, and I used all of that money to build out an entirely free position in Johnson & Johnson, an entirely free position in Pepsi, and all of those stocks are still up from where I bought them. That's why I recently just sold Tesla, and I put some of that money into McDonald's, because McDonald's, guys, again, it's not everyone's favorite stock. It might not be for you, but for me, it's probably going to be one of those companies I can hold until I'm 80, and it's not costing me a single dime because Tesla gains are still completely paying for it. Now, this is just a conversation that is more suited to me as a broader topic, because I don't want people doing what I'm doing here. I'm obviously sitting on over $400,000 in a portfolio today, and I want to continue solidifying it because that's enough money to propel me into my retirement into the future. And I'm going to keep trying to be awesome here and continue to make money. And if that's something you can appreciate, let me know what you think in that comment section below. And more, enlightening, I want you to stay awesome. I want you to stay cool. And I look forward to catching you in the next one.